guys, it's Master the Best right here, and welcome to my YouTube channel. On this channel, I'm going to be sharing with you insightful forex educational content that is going to help you to grow as a trader, you understand, and to level up from being a learner to an earner in the forex market. So this channel, this is the purpose this channel is serving. So please, if you are interested in growing as a forex trader, please make sure that what you make this channel your favorite channel, your top one channel, because we'll be releasing back to back what insightful forex content here on YouTube. All right, without wasting much of your time, let's head straight to the topic of today. Today we are going to be discussing about forex trading complete beginners guide part 1. This is just part 1. I'm going to be releasing other series, you understand, and I cannot actually there are so many beginners concept that people need to get accustomed with before they actually advance before they actually move to the advanced level. So they are so enormous, so I just take it gradually so that for easy assimilation, you understand. And if the video is bulky, it doesn't make sense, you understand. So this is the foundation of forex trading. This topic is the foundation of forex trading, and when something is being regarded as a foundation, it is the bedrock. It is the background. How will I call it? The bedrock upon which other things are built on. You understand? Sorry to say that. Sorry for the mistake. Upon which other things are built on. You understand? So if the foundation is not strong, you know what is definitely going to happen to the building. The building is definitely going to collapse. You understand? So it is the bedrock of anything you are doing in the forex trading, because even though you have gone past the beginner's guide, you understand, you are still going to make reference to this foundation, you understand, this foundation, because it contains rudimentary knowledge about forex trading. You understand that if you miss out, you have missed out on it, you understand. Just like in mathematics, the moment you miss the formula, the moment you will not arrive at the answer or the correct answer. So please, if you're interested in this topic, please subscribe, turn on the post notification button, and like this video, so that each time I'm going to be releasing other subsequent series, and also some other hot and bang and wonderful content that I'm here to release, you understand, on this channel, that this channel is here to bring forth to you, you understand. You are going to be notified. Without wasting much of your time, let's head straight to the topic of today. Let's to the questions that we are going to be answering on this topic. Right, the questions are: what is the full meaning of the word forex? You understand? A lot of person don't really know this word. I was speaking with somebody and I mentioned what forex is to the person, and the person was shocked. If the person thought that forex is just forex, you understand, there's no other meaning attached to it. If you are in such category and you find yourself on this channel, please know that you are at the right place. You are going to be clarified. So the word forex means foreign exchange. It's an acronym, and the full meaning means foreign exchange. And what are the activities that goes on in this market? In this market we buy and sell currencies, you understand, of different countries, you understand. This is where we buy and sell currency. Let me just give you a summary, like a summary of the activities that goes on in this market. For example, I have dollar, or I own a dollar currency, you understand, and you are in need of the dollar, and you have naira, you understand. You are going to approach me, and I'm going to tell you the price that you are going to pay in naira to buy my own currency. So you're using naira to buy the dollar. So that is just the entire activities, the summary of the entire activities that actually goes on in the market, you understand. So how long does the activities of the market last? You understand, the market runs for 24 hours, you understand. And when does the market open and close? The market opens on Monday and closes on Friday. So I think we are done. I think this one is very simple, straight to the point, no waste of time, and we are done with this slide. Let's move over to the next slide again. So where does the forex market activity takes place? It takes place in an online space, you understand, through the interbank network connection. All the banks of different country, there is that of different countries come together to buy and sell currencies there. So it is the the market of the bank. You understand? Why is the market regarded as a decentralized market? The market is being regarded as a decentralized market due to two reasons. One of the reasons is that the market is what is not being organized, or what organized in a in a certain online space. You understand? Or a specific online space, or a specific location. Let me just use that word, specific location. Just like in the stock market, where if you want to buy a share from any Nigerian company, you will go toward a Nigerian stock exchange online space to get such or buy such shares. You understand? But in the forex market, that is not obtainable, because like I said earlier on, that all the banks come together to trade, to buy and sell currency. So the banks are the forex market itself. So you don't need to go to any country online space to get such words, to get such transaction done. You understand? All the banks are coming together. I just say that forex market is a conglomeration of what different countries bank coming together to do buy and sell each other's currency. That is just that. And the other reasons why it is what regarded as a decentralized market is due to the fact that what no government can actually make policy that can actually shape the way transaction occur, or the modus operandi of how the business is being conducted on that particular market. You understand? Just like in the stock market, if you want to get if for example, like I said, that you need to go to the Nigerian stock exchange to buy any Nigerian share. You understand? And that stock exchange is a body that is a body of is an agent of the government that are dedicated with the power of making rules, laws that actually govern transactions, or shape or dictate how transaction takes place in the world stock market. But in the forex market, that is not really the case. So I think I've answered that one. Who are the persons participating in the world activities of the market? Before I actually dive in or dive into the into this topic, I'm going to want to talk about the types or kinds of trade that are being that people do participate, or people do in forex trading. You understand? So one of them we do exchange, and the other one we do speculative word trading. So through with this explanation, I'm going to explain these types of trading. You understand? With this explanation, I'm going to place these people into this market participants into what the category they belong, depending which is what being determined by how or the kind of trade they do participate in the forex market. You understand? The forex market is just an umbrella for different kind of activities. You understand? And we need to categorize these people into this category. You understand? So like I said, we do exchange, that's where we buy and sell currency, and we do speculative trade, that's where we bet on the appreciation and depreciation of price. So let me just dive further. The people that are in the exchange type of trading is the banks of different country. Like I said, come together, the head banks of different country, the central bank of different country, and also the commercial banks, of course, that are domicile in a particular country, come together to buy and sell currencies. You understand? Through the interbank network connection to buy and sell currency, or the currency. You understand? So the central banks and the commercial banks of the country come together to trade this currency. The central banks, they don't do this transaction on any profit orientation sake. You understand? They don't do it based on they want to make money from the market. Their sole purpose of participating in the forex market or intervening in the forex market is to make money is to stabilize the exchange rate, or the value of the currency. You understand? And in the forex market, the exchange rate of each particular currency is a floating exchange rate. And what do I mean by a floating exchange rate? The government cannot does not dictate what the exchange rate is. You understand? The exchange rate is determined by the force of supply and demand. The more people buy a particular currency, the more the price of the particular currency goes up. You understand? Because the demand is high. The more people are not willing to purchase that particular currency, the price of the particular currency will depreciate. That's what they call currencies are depreciating. You understand? So you see that it is the window of the supply and demand that determines how or what the exchange rate of a particular currency is going to be. You understand? And the sole purpose or the sole duty of the central bank, central, I call it central bank because in my country what we call our head banks are the central what we want to call our head banks is what the central banks. Other countries have what they call their own central, their own head bank. Like I can remember that the US called the bank Federal Reserve. Yes, yeah, they call the head bank Federal Reserve. That's what they call the head bank. You understand? So my own country called Nigeria, we call our own what the central banks. So these banks, the sole purpose of participating in this forex market of buying and selling other currency, or what selling their own currency and buying other currency, is to regulate the price, or is to what stabilize the exchange rate of what their own country's currency. And how do they do this? They do this by what? For example, if the country's currency is depreciating, they will take measures to what? Make sure that what? The currency rise in what? In value. That value means the exchange rate, you understand? So that what it can, they make, how do they what make the currency to rise in value? They make the currency to rise in value by making monetary policies to what? Influence the exchange rate. And how does this policy influence the exchange rate? This policy influence the exchange rate. They make monetary policies to what? Entice people to buy the currency. Like I said, the more people buy a particular currency, the more the price increases, you understand? That is what is already obtainable in what our normal market. You understand? When we buy something, the more people buy a particular product, maybe for example there are what people, few sellers in the market, the more people buy the particular product, the more the people who are selling those particular product are going to monopolize the price by increasing the price, because they know that what, they have seen how people are eager to buy that particular price at all costs, not not what looking at the price tag, or not putting into consideration the price of the particular product. They are willing to pay any what price the buyers call for them. So with that, the buyers, because they know that what, there are few sellers, the sellers that are in possession of those goods are going to increase the price. So that is just how the force of supply and demand is in the forex market. So the government are going to make monetary policy that's going to what? Entice people to buy the currency. And what are those monetary policies that the government make to what? Entice people to buy this currency? There are a lot of them, but I'm going to, because of what time's sake, I'm going to be calling one the interest rates. When the government make a good interest rate, more investors, foreign investors, will be forced to actually purchase the currency. You understand? For example, I'm just making an illustration. The government of Nigeria make a good point, like the central bank of Nigeria make a very good interest rate. People will be forced to save in our bank. Foreign investor will be forced to save in our bank because they want to grow the capital. They know that if they save the money, there's the interest of the money will be bigger. You understand? The interest that the money is going to yield will be bigger. You understand? So, and if they are saving in that particular currency, in that particular country, they need to obtain or buy our currency in order to save in our country bank. You understand? By so doing, by buying our currency, they are adding to the demand of the currency. And what do I say that if they are buying the particular currency, it will increase the price of the particular currency, because they are adding to the demand of the particular currency. And also, you guys have heard about federal government bond and treasury bill. You understand? They are debt instruments that the government sell. You understand? You are in that kind of transaction, you are lending the government money to do business, and the government will tell you some specific what they call it, they'll give you time that they are going to pay you that money, and that time they are giving you that they are going to pay you that money is called maturity date. You understand? Once the maturity date comes, you understand, they pay you the money, but before the maturity time will come, they will be giving you interest, paying you interest. It depends on the kind of transaction, a kind of agreement, whether monthly or is it annually. I think depending on the kind of bond you bought or the kind of treasury bill you bought, you understand, that is how the government is going to be paying you. So this foreign investor, how do they borrow government money? Because our government, they need naira to carry out this transaction, carry out the project in the country. You understand? They need naira. You understand? So when purchasing that particular currency, that particular bond, you are purchasing it with naira. And how do you get the naira? You need to buy our naira to be able to lend to the government. So the government is going to be paying you interest, and when they are done, using the, when I'm done with the project, they pay you back what, your money. So you see how the these central banks make monetary policies to what, make people to what, yarn, or make people to buy our buy currency, buy our currency, that the price of the currency is going to appreciate. You understand? As the price of the currency appreciates, the more what, the more the price of the currency becomes valued in the market. You understand? And again, there are other means what the federal government regulates the currency. How do they regulate the currency? Like I said, if the price of the currency is what, is going high, people are buying it. You understand? That's how the people are going to purchase that particular currency too much. The price is going to get overbought. You understand? In life, excess of everything is bad. You understand? If they will tell you that what, you need high blood pressure kills people, you still hear that what, low blood pressure still kill people. You understand? They will tell you that what, do this thing is good, but excess of it is what, bad. You understand? So you see that what, we are not even safe. You understand? We actually need the currency to go up. If the currency is going up, the price of the currency is the exchange rate of the currency is going up, it is good for the economy, showing that what, the economy of the country, because the value of the currency is what, representing, is a representation of a good economy. You understand? So if the economy is good, the currency will be going up. You understand? People will be buying that particular currency. But if the price of the particular currency is not overboard, it's not very bad. Why? Because what, it will not lead to what, for those persons that's did economics in school, it will not lead to what is called trade deficit. What is not trade deficit? Trade deficit is a situation whereby the amount of imports into the country is not greater than the export. What is import and what is export? It is not, but you guys know it, but I'm going to still explain it. Export is what we are what, exporting to other countries, what we are selling to other countries because they don't have it. They don't produce such things in the country, in their own country, and they pay us for what, for that transaction. Import is what they are what, importing to the country, into our country, what they are selling to us because we don't have it. And before a country is going to transact with other country, they have to have they have to purchase the what, that very particular country they want to transact with, their own what, currency. And by buying that particular currencies, that particular country currency, they are what, adding to the demand of that particular currency. So you see now what, that if the price of the goods, what, the price of the world currency is what, now overboard, it's not going to become expensive for people to partner with us or do business with us, because in order to do business with us, that they need to buy our currency. But if they are buying our currency, our exchange rate is not high, people will not be willing to buy because it's not expensive, the price is exorbitant, they don't want to waste money again. They will rather what, check what, an alternate what, check the other what, country, whether they are what, their own exchange rate is a little bit what, good. You understand? Human being, they will always like to take the easy way out, look for where it is, the prices or the condition is more favorable to them. Like you went to the store to buy something and the person is calling a big price for you for that particular commodity or that particular thing you want to buy, and you see a counter shop there, are opening there, or what, neighbor there selling it at a cheaper rate. Which place are you going to go to? You are going to go to the one that the price is favorable to you. It's not so the one that your pocket kill. You understand? According to Nigeria, the one where your pocket carry, now you go. No be so. That is just it. So you cannot go to where your money will finish just from buying one particular stuff. You understand? Go to where you can purchase two of it, of that particular thing. So you see that is how to manage money. So this is how the government do regulate it. So how would they bring the price of the currency down? So what would they do? What they will do is that they will go to they will buy, they will take the bigger amount of their own currency to buy the other currency. You understand? To add to the demand of the other currency, to make the other currency go high, and make our own. As a result of that, our own currency is going to, our own exchange rate of our currency is going to depreciate, go down. You understand? And the federal government, the central banks also, because they are giving or dedicated with the power of printing cash and disbursement of cash, supply of cash into the market. You understand? They can also restrict the flow or the supply of the money into the market to create scarcity. Once there is scarcity of a particular goods, the demand of that particular goods will keep increasing or surging high. If they want to still increase the volume of demand, they will reduce the flow of the cash into the market, so that what people do, it will not create scarcity, so people will not be yearning for it. The more the people yearn for it, the more the demand what increases. So this is how, or method, in which this government, or in which this authority, I like, I don't know how many times I've called government here, in which these central banks regulate or stabilize the price of what, the exchange rate of the what currency. They're not there to make money, just to stabilize the currency, monitor the currency's what value, and make sure that what it is stable. You understand? And the other persons that practice or indulge in this kind of trading for profit reasons are what, other commercial banks, local or municipal what banks that are in that particular country. They are what, they domicile in that particular country and operate. Like in Nigeria, we have Keystone Bank, UBA Bank, GT Bank. All these banks, you understand, they partake or participate in the forex market, because what, where do we, the customers here of these banks, are called investors. Why do I call them the investors? You understand? Because anybody that is what, buying a particular country's currencies, is investing in that particular country's currency, because it's adding to the demand. And like I told you, that what, a currency that is doing well is a representation of what, the country's economy is what, good. So if you are participating, if you are what, buying a particular country's currency, you are what, adding to what, you are what, investing in the economy. You understand? So some persons that what, that earn in dollar in Nigeria, and they are living in Nigeria, so our legal tender is naira. So in order for them to live life here, they need to go to the bank. And which bank do they do this transaction? It is all these commercial banks that they do what, go to exchange their foreign currencies into naira, for them to what, purchase things in Nigeria. Exporter and what, importer, people who do such business, all these Igbo men that import container, you hear my container and Natago, all those people, where do they go to? Because I told you that what, in order to partner with other country, you have to get what, the current country's currency, in order to what, buy something from them. You understand? So where do all these what, importer and exporter get the foreign currency from? It's through the what, going to the bank to what, get this one, these commercial banks to what, make this what, exchange. You understand? And there are some foreign companies, foreign what, investors from different countries coming to what, establish businesses here, build companies here. And since they are building company in Nigeria, they will have to what, exchange the currency into what, naira, to what, to make push or keep the business afloat in Nigeria, because the business is what, being established in Nigeria, it domiciled in Nigeria. So they have to what, keep what, using the naira to what, push or keeping to keep the business afloat, keep moving, in naira, it keep moving in what, in Nigeria. So they will still buy dollar, naira, you understand? By doing it, they are what, adding to what, the force of demand of what, naira. You understand? So they go to the bank. So every person that is buying a country's currency are investors, that are called investors. So they go to these banks to what, do this exchange. And these banks also participate in the forex market. So these banks, the more people demand for a particular currency in the bank, in that bank, the bank goes to what, the internet, to the interbank market, to what, buy all this currency, and do business with their customer. And what is the gain there? Like I told you, that what, these kind of banks have what, gain. They do this forex trading for a gain, for profit sake, because them going to the market to purchase these goods, like for example, make use of what, normal real life market, real life business people. You being a wholesaler, going to the market to purchase what, your goods in a bulk, carrying to sell to what, the smaller people, who are called the retail trader. Retail was is it buyer, right? So if you are going to what, spend transport going to the place of the manufacturer, right? It's not so. And again, if you are also going to purchase the goods for the price that the producer will want, or manufacturer will call for you. It's not so. Then when you now bring these goods down to the retail, to your store, for retail traders for retail trader customers to what, buy, or buyers to buy, you understand? You will first, the factors you look out for in determining the price you are going to what, are fixed to it, is what, the cost of your transportation, the cost of the goods, and your own profit. All this makes up for the price per tag you are going to give for that goods. You understand? So these commercial banks, because they buy this currency with their own money, this foreign currency with their own money in the international market, and bring it to the investors to what, come to the bank to exchange, they are going to charge you for that thing. They are going to put their gain from that word transaction, or from that exchange they are doing or transacting with you. So that is the profit, the gain. You understand? So this is the kind of what forex trading that takes place. They do this. That's why I call them the exchange type of trading. They buy and sell currency here. But in the speculative world, or in the speculative kind of trading, it is what the broker that organizes it. That's what we call forex broker. They are the CFD providers. What is CFD? It is the contract of difference. They have a platform. This is where we individual person come in play. Stand. You will see some persons carrying their laptop or phone, drawing line on the price charts. You see charts. They will draw in line using all sort of what terms, terminology in the forex market. You understand? And be trading. You understand? Telling you this is support, this is resistance, blah 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 blah. You understand? This is where we fall under. We are speculating. The brokers are the ones organizing this kind of trade. True, they are the CFD words broker, because they offer you contract of difference. That's the meaning of CFD. They offer you the contract of difference. If you go to the platform where this trade is being organized, you will see the currency derivative. What is currency derivative? It is not a real currency. You understand? It's just a digital currency, a representation of the real currency that is being traded in the financial market, or in the forex market. The exchange rate of that particular derivative is what linked to the main forex currency. You understand? The main currency. You understand? So if the exchange rate of the main currency falls, the derivative is going to fall. So you're just mimicking the derivative is just mimicking what the main forex currency. You understand? So they put it in the platform. You bet on that. You bet like Naira Bet or Bet Ninja. You bet on whether the price of the currency is going on the appreciation or depreciation of the currency. If, for example, you believe that the price of the currency, let me say Naira to United States dollar to what Naira is going to what appreciate, and you bet, like for example, now you came into the market and you saw the price of $1 to Naira is 15 Naira, and you bet that what the price of Naira to dollar it is going to rise from 15 Naira to 100 Naira. If the price eventually rises from 15 Naira to 100 Naira, the broker is going to pay you what the difference between from that point you call the price to the point the price got to. So this is how we calculate the profits, and I'm going to be telling you how you are going to calculate the profit on my next subsequent beginners guide I'm going to be releasing, because I told you that this is a series, and on my next subsequent beginners guide I'm going to be showing you there are a lot of beginner stuff you need to understand or learn. You understand? So I'm going to show you how to calculate all these things. So they're going to pay you the difference. You understand? And while placing this bet, you are going to put certain a portion of your money or account at risk. That's why we in trading we call it risk. You put it as a bet. So in case the thing that you predicted goes against you or did not go, price, instead of price to appreciate, price depreciates, it continue to dwindle to the downside. The broker is going to take that money. So you see now, and this broker have a lot of clients. You understand? People that they are facilitating this trade for, or doing this transaction for. The moment in the trading platform, there's an option for buy and sell. If you believe that the currency is going to appreciate in price, you buy. You click buy. If you believe that the currency is going to depreciate in price, you click sell. So if you click buy, your broker is clicking sell. So it's taking the opposite side. And these brokers charge for this kind of trade because they are helping you. They're taking the opposite side. They're helping you do this transaction. You understand? They're going to, just like the bank charge you, they them to charge you. You understand? They make use of the main forex market exchange towards, and plus their commission for that particular trade you want to take. They are going to use it to charge you. You understand? So that is how these people operate. You understand? Once you win, they pay your money, but once you lose, they take your money. You understand? So they have a lot of clients that's from different part of the world. You understand? And these persons fund their account, or each individual account, with different currency, and the broker charge for each transaction they do with you. You understand? So they have a lot of money to pay you, and they have a lot of different kind of currency. Depending on the one you demanded for them to pay you with. You understand? They have the different kind of currency to pay you with, depending on the kind of account type you set for yourself on that broker's page or broker's platform. So they are going to pay you with, because they have different clients coming funding with different currency. So they're going to pay you with any kind of currency you want for yourself. So That is just how the trade occurs. You understand? We speculate, we do our analysis to predict which place or which direction the market is going to go to. So we make money from the fluctuation of price with this particular kind of trade. You understand? Fluctuation of price, that's how we make money. You understand? So some commercial banks do participate in this kind of what forex trading, called speculative forex trading. You understand? Because some commercial banks do that. Some banks that have made a lot of profits, so they don't have what they are using the money to do. They call professional traders like me and you to help them trade their fund, and they tell you the amount they are going to pay you, or you guys are going to split profit together. There's some big men that don't have what they're using money to do. They call professional traders to help manage their funds for them. You understand? That you guys will make an arrangement of how much you are going to be paid. Such persons, they call them hedge funds. There's some big companies that big companies that do participate in this kind of forex trading. You understand? They have a trading station that people where traders help them to trade their money. You understand? So that's just it. And this kind of people, this kind of persons, we an individual trader in this kind of forex market is called retail trader, because we don't have big capital. We are upgraded by our own, the amount of capital we use. But these commercial banks, big companies, all these big men, all these big companies, all these big men that these hedge funds help to manage their accounts, is what they will regard them as what institutional traders, because they are exposed to more capital than us. You understand? The amounts they will in the market, we as an individual standalone trader cannot come in contact. We don't have that kind of amount of money at our disposal. So that is just it. And I think this is where we are going to call this topic a day. This part one, a day. You understand? This is where we are going to be closing our curtain for today. What is a forex broker? Like you guys have heard about it. A forex broker is the person, or it's just like a financial intermediary that actually facilitate buying and selling for traders. You understand? So that is just a simple definition of what a broker. Like my definition or my explanation that I actually did on the previous slide has already explained everything. You understand? You don't need any formal definition of who a forex broker is. You understand? So let us head straight to what you are going to consider when choosing a forex broker to trade with. You need to choose a forex broker that is fast in execution. That's on forex broker that before they are going to execute, before your buy or sell is going to hit the market, it will take time. It will be showing loading, just like our network. When you are about to browse something important, you are in need of a particular information from the net. You understand? That is when the network is going to be fucking up. You understand? Your browser is going to be showing loading. You get tired of loading. So you need to choose a broker that does not give you stress. You understand? And choose a broker that is being regulated. Choose a broker, like for example, what do I mean by regulated broker? In order for a company to start operating in Nigeria, it has to be regulated under the Corporate Affairs Commission. The same thing is applicable in the forex trading space. In order for a broker to start operating in a particular country, accepting its citizen, it has to be regulated under a body that is charged with such duties to do such things. You understand? So you have to choose a broker that is regulated. If you don't choose a broker that is regulated and they refuse to pay you, there's no means you can channel your grievances because to the government they were conducting the business illegal or illegally. You understand? So the people are not known to the government. So you choose people where you can actually, because this regulated broker, they know that if they fail to pay your money, you understand, and the complaint reach this body, they are going to sanction them. So the fear of sanction will make them to comport themselves and pay you your money that you want. You understand? And make sure you choose a broker that is operating in your jurisdiction. That is a broker that is accepting clients or people from your citizen from your country. Like I said, before a broker will operate in your country or collect citizen from your country, your accept citizens from your country, it has to be regulated under a body that is charged with the responsibility for that. You have to choose a broker that I think I'm still thinking. Just trying to remember. You have to choose a broker that is fast in execution, a regulated broker operating your jurisdiction. You have to choose a broker that has or supports so many plethora of what withdrawal method. What do I mean by withdrawal method? Means of what? Of withdrawing your profit or money from your what? Your brokerage account. So, for example, when I'm making an illustration. For example, you want to withdraw your profit from the market, and the broker is telling you that it only supports people who open bank in what UBA, and you don't have UBA bank account. So by so doing, you don't even qualify to make withdrawal from that from the brokerage account. So you have to have a broker that supports so many exchange method, whether it's through crypto wallets and the rest of them. You have to also select a broker that makes use of different trading terminals platform. That's what we call trading terminal. That is where your broker places when you place buy. Your broker, you have given your broker your broker instruction to place buy for you. You understand? So your broker will execute that buy for you. So the platform in which this buy is being executed is what's called trading terminal, or we call it exchange, where we do this stuff. You understand? So you have to choose a broker that supports so many platform, so many terminals. You understand? The major terminals that are that is popular, sorry to say, in the industry is the MetaTrader 4 and MetaTrader 5. You understand? So make sure that your broker, even though it's not supporting other platform, please make sure that it's supporting MetaTrader 4 and 5. That is the most important one that is being used in the forex market. You understand? So I think that is just all. Please, if you have watched this video thus far and you enjoyed this video and you gain a lot of things from this video, please, I want you to subscribe, turn on the post notification button, so that when I'm going to be releasing video, YouTube is going to notify you. Please comment if you understood everything or everything made sense to you, like it's clear to you, or everything I said. Please comment correct on the comment section. And if you don't understand anything, everything I taught on this on this topic, please make sure you do well to relate that on the chat, on the comment section. Jot it down there on the comment section, and give me ideas of videos you want me to make for you. I know a lot of persons are still lost on so many things in trading. If you find yourself in such category, please make sure you comment any topic you want me to do. I'm still going to make use of that when releasing any video. On my next release, I'm going to still make use of that. So that is just it. Please subscribe, please. I'm begging you, please subscribe. Please subscribe. Like, this admonishes me to keep on pulling out good content, or giving out my own full best. You understand? If you don't do this, I'll be dejected to pull out more videos. But if you still if I see you come to the video, it could come to my channel, I'm seeing good subscription, views and the rest of them, I will be it will invigorate my energy to keep on releasing more content. I'm not going to be tired. Please just do this. Just like I'm using my content to help you grow as a trader, please help my channel grow with your subscription, your likes, your comments. Please do that for me, and God bless you. Stay tuned, don't change the channel, stay tuned to this channel. Always take it as your number one channel. See you next time when I drop another video.